Guys, it's Paul Harrison here. What we're doing is we're just having a look. We've just had the Monday night call where we're going through a few of the stocks that people are trading, and really getting some idea of what they're doing and how they're getting on. And a question that came up is very interesting question. Something a lot of people when they're starting to trade actually come up with this question. And the question basically is that one of our clients you would see here actually got into this trade at around about the end of October. It was either end of October or it was early November. Okay, now what has actually happened, and what he said was he got into the trade and it rallied up slightly, but then it's come back down. And his question to me is basically, if if I'm in a stock like what I am, I've got into the stock and it's basically rallied and then come back and sat on the support line. What should I do? Should I get out of the trade? Because it just seems to be bobbling around. This is what he said. It just seems to be bobbling around, and really doesn't seem to be doing too much with it. And I can understand what he's saying because obviously people, particularly who are starting to learn to trade, they want to see markets move quickly. They want to see their results come in one way or the other quickly and get confirmation they've done the right thing or the wrong thing or what have you. My answer to them basically is, as long as you've taken the trade, you've taken a trade that you are happy that you've taken the trade. So basically there's no reason why you shouldn't have taken the trade in hindsight. Okay, if you've done that and you're still following the rules, but the stock hasn't taken out and it hasn't got you out or hasn't got you out with profits, so it hasn't hit either your stop loss or your take profit, your limit order, then you've already accepted the risk. So with any trade you get into, obviously there's a potential that the trade could go against you, but then obviously the risk that it could go for you as well and make you money. But as soon as you enter any trade, you're always taking on risk. Okay? And the way I see it is basically, if you've already accepted the risk and you got into the trade, then you might as well just wait to see what happens, because there's been plenty of trades I've been in where basically the stock has actually just hobbled around for a few weeks up to, I mean there's been times where I've sat for about a month with the stock just sitting on the support line, and then all of a sudden it's taken off. And because you've already accepted the risk, if you were to get out of the trade now, then it's not going to you're going to get out with a minimal profit, or with maybe a slight loss, or with no money at all. But you've accepted the risk. Potentially the stock could go to the upside for you as well. It is sitting on some support there. But let the stock do what it wants to do now. You've placed the trades. There's no rules that you've broken or anything like that. So yeah, once you've accepted the risk, might as well run with the trade, unless there is a proper reason why you shouldn't have got in that trade to begin with. So basically, if you're in the trade, you've accepted the risk, run with the risk, because now the worst case scenario is it rolls against you, stops you out at a slight loss, but then the best case scenario is it can continue up in the direction you wanted to go in. So once you've accepted that risk, then stick with it, unless there's a proper reason why not to. So I hope that makes sense, and adds to your trading. So all the best, folks. Thank you very much. Cheers. Bye-bye.